Hey, what's up, everybody? It is Monday, September 7th, Labor Day. I didn't have the day off. I finished the latest issue of MMT Trader. If you want to get a copy of that, go to my website, go to pitbulleconomics.com, sign up for a 30-day free trial. Remember, I'm the only one who has an applied approach to MMT. A lot of MMT academics out there writing papers, talking about the MMT concepts. I have taken those concepts and understandings and applied them towards trading and investing. I'm the only one who does that. All right, I have over 40 years trading experience, was a member and floor trader on 4 exchanges, managed money for a major hedge fund and also an international bank, ran their prop desk. So I got the trading background, I got involved in MMT. I put together this MMT Trader. This is an applied approach. You take the ideas of MMT and you apply them to investing and trading. Go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. All right. So, quiet day. We had futures up in the Dow and the S&P, basically reversing the losses of Friday. NASDAQ futures were down. The sell-off so far is mainly being led by the tech sector. And really, if you want to know, there's only one thing that I can see right now, which is, let's say, negative for the economy, negative for the market, or sending off a negative signal, and that is corporation income taxes. I've been talking about this. We have the last 9 out of 10 statement days. Daily corporation income taxes have fallen below the level of last year. Now, we saw that happen in June, and the market had a 7% correction. You know, those corporation income taxes, they're very sensitive to what? Sales and profits. Obviously, companies make more profit, they have to pay more tax. Companies pay less, make less profit, those tax deposits go down. So that's what I'm seeing right now. Apart from this, same story. Record fiscal flows, spending is through the roof. The year-over-year increase in spending has hit a new high. So that's like very supportive. Right now, I'm taking a defensive stance on the market based on those corporation tax deposits. However, if I see that thing turn around, you know, I'm getting right back on the long side because this market's going to go a lot higher. I mean, it's really, really dangerous to fight against these fiscal flows. You got to understand, these things are enormous. This spending level, I mean, the nominal amount of spending we have never seen before in history. The deficit is now up to 2.7 trillion. That is 14% of GDP. You got to go all the way back to 1945 to see an equivalent in terms of percentage of GDP. This is powerful stuff, man. This is like, you know, the economy on steroids. Now, I know it's not being equally distributed, and a lot of people are hurting out there, and a lot of people don't have jobs, and a lot of people are wondering what the future holds for them, and I understand that. But as I've explained so many times, it's a tsunami of money, and it is flowing to corporate profits of the biggest corporations, and they have the most impact on the market averages, and they're just dragging everything up. You know, that's just the reality. That's just the reality of what's going on right now. But as I said, at least one indicator, those corporation income taxes showing some weakness now for the past 9 out of 10 statement days. So we'll have to see. We don't get any data today because obviously it's a holiday, so I'll take a look tomorrow and see what happens. But right now I have a defensive position on the market because of that. And I have to say that is somewhat tenuous just because the flows are so enormous. let me talk a little bit about oil. You know, we saw a sell-off last week. If you've been following me for any length of time, I know subscribers, I've been saying you got to be short oil. You got to be short oil. Now, the interesting thing is in the last couple of weeks, and the reason I said you have to be short oil basically is because producers have been short for like 18 weeks in a row. They just stayed short. But in the last couple of weeks, we have seen some pretty bullish developments in supply and demand. Now, last week we saw a hit to demand, but that was hurricane related. That's going to flip right back around. We saw a huge drop in U.S. domestic oil production, down 1.1 million barrels a day to 9.7. I don't even know when the last time was when we saw 9.7 million barrels a day. That is really low. I mean, if you think about it, in March we were at 13.1 million barrels a day. 13.1 million barrels a day. I mean, so what? We're down almost 3.5 million barrels a day in that period of time, and a 1.1 million drop just in the last week. I mean, that is huge. That is huge. And we really haven't seen any recovery in the rig count. The rig count is still extremely low. One thing that's interesting is natural gas. You know, you got these record-breaking temperatures out in California. It's been unbelievable. Unbelievable. My son is out there right now and he's like saying, man, you know, it is brutal. Just on a side note, 2 summers ago in July, I went hiking in Death Valley. I think I have even a video up here that I made, and it was 130 degrees. So whatever they're feeling out there, and I feel bad for those people. They're suffering through the heat, and if you're out there in Southern California or anywhere in California, anywhere out west where there's this heat wave going on, you know, hopefully it'll break for you soon. But I was in 130 degrees and I hiked through Death Valley. I even went running one morning. It wasn't 130, it was like 10 something, 101, 102. I went running early in the morning. I like those conditions. I like extreme conditions. By the way, I did go hiking this past weekend, but here in the New York area. What else? Dollar is kind of treading water here. It is in a trading range. We made a new 2-year low last week, but then it popped back up on this, you know, kind of flight to safety buying, but the dollar's trend is down. Gold, yeah, let me mention gold. We have seen in the latest week, producers, for the first time in a while, they've been selling, all right? Now, it wasn't aggressive selling, but no doubt about it, they have been sellers, and I think if you, I think that means we could be going a little bit lower in the gold price, more consolidation, but that's fine. I mean, that has to happen. We had a huge run up. So, right now, a little defensive on stocks. I'm selling rallies in the dollar. Gold, I'm long, but I'm kind of sitting on the sidelines waiting for a dip. I'll add some more. And we'll see what happens with those corporation tax flows. If they turn around, I mean, this thing's going higher. This is like a loaded spring, man. With all this fiscal, I mean, it is really, really hard to keep the market down. There's just, man, so much money being pumped in. And again, I know it's not going out equally, but it doesn't matter to the market. When you got a handful of stocks that pull the averages up, it really doesn't, the market's not, you know, it could do this. And people could say there's a disconnect, but there's not really. You know, most of that spending flows to corporate profits. So anyway, go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. See everybody tomorrow. Stay safe. Bye-bye.